All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Yesterday, after this kind of little bit of a dip and then rip, we talked about how this action in the market yesterday was just different than what we have seen in a while, and how it was much more fear skewed on the downside, where everything got dumped. And then on the upside, a lot more aggressive style type of buying. And, we this first time we've seen that type of V-shaped action with that type of market dynamic. You'll notice there wasn't any big bottoming volume or anything like that. This was a little bit bigger than that in terms of just the magnitude of change, and it wasn't algorithms driving everything. You know, when we see that big volume element bottoming come in, a lot of times that's algorithms driving things. This was not the case. This really looked like, fund managers panic and then smart money buy, and the V kind of held, the buy-in kind of held, and we saw buyers step back in to a monster degree into the close, rallying the market almost 50 points in the last hour. That's just a monster move. And, one of the things I talked about yesterday is options are pricing in big moves. And rightfully so. I'm not saying options are wrong. They're pricing in big moves. And so one of the things that will happen if there's not a big move is option prices will get compressed, and they will get compressed very, very quickly. And that is one of the risks that's out there. So it's one where I decided into the close that I would hold my IBM and look to add today on either a gap up or on some other type of action. Now here you can see the S&P is pretty much set to open up where it closed yesterday. S&P futures last night traded in a 30-point range, and we're looking at a fairly flat open. In fact, at one point, S&P futures were down over 20 points as Europe was getting ready and opening. And they have come on back. They've come on back here on some volume here this morning, and some of this is because of oil prices snapping back. You can see oil prices here with the OPEC meeting. They have really driven higher from 51 up to 53.5. So getting a big boost from that. Ultimately, I think this is a temporary boost for oil. We talked about it. When it comes to the OPEC stuff, it probably will be a rally and then some fading of that rally. I'm not looking for fade today. I'll be looking for a fade of the oil rally into next week, and somewhere around the 56 to 57 level, not this 53 to 54 level. I think the shorts are a little too aggressive right here and might get a little more squeezed than what they would really like to be squeezed. But those are two of the more substantial things kind of going on this morning. We have some analyst chatter, price target downgrade on Apple, things like that, but nothing that I look at and go, wow, this is really significant. This is really important to the market, and this really matters. I think the most important thing out there, I don't think it has anything to do with, some of the hubbub of yesterday and the arrest of the Chinese official. I know that's still a hot topic in the news and everything else, but that's one of those things that if it happened 3 years ago, it wouldn't matter. It did matter, yesterday, but I don't think it's going to be a continuing saga here, as I talked about yesterday, and I'll stand by that. But overall, the market is anxious, eager for data, eager for something to sink its teeth into, and really still seemingly on edge about the Fed. And the Fed came out a week ago and really started to change their tune. A week and a half ago started to change their tune. This week, though, some of the Fed talk is really kind of not mirrored what they talked about a week and a half ago. But this morning we had the jobs report come out, and if you look at the numbers, non-farm payroll number, the consensus was for 190, and the actual was 155. The prior revised was actually revised down. So big miss. Big miss in the jobs number here. And you can see what that looks like down here below. It's still trading. It's still within trends. It's not showing anything, really negative there. But, you go, okay, big miss on the jobs number. Well, wait, why is the market up? Why is the market reacting higher? Well, here's the market reaction to the jobs number, right? It is reacted on higher to this jobs number. And we've also seen bonds come on down a little bit. What does that tell you about what the market expectations are? I understand this consensus number right here is 190, and that's the consensus number, and it missed the consensus number. But when we see something like that, and we see an opposite reaction, it tells us this consensus number, something has happened in the market that the market was fearful it was going to be a lot worse than this. Right? I mean, let's face it, market was fearful it was going to be a lot worse than this. This consensus isn't updated in real time, and what happened over the last couple days here, trade-wise, market was a little more concerned, and so the market a little relieved that it wasn't worse, and we don't see that very often. But with the events of this week, and the way everything's going, that has taken place, that has transpired here. You can hear the bell. Market is getting ready to open. It is a fairly flat open. You can see the Qs are down about 70 cents. Small caps down about 18 cents. This is an open where on a gap up, I was looking to kind of get aggressive. The only thing that's gapping up is energy, and I'm not looking to get aggressive in energy here with where the charts sit. So it's one where that's not an area that I'm too keen on or wanting to get very aggressive with. I'm very interested in the banks, very interested in some of the tech names out there. I do think this Apple downgrade could weigh on things here just a little bit. Early on this morning, it's one where a Nike, would be very interesting here to me this morning. But one of the things that I mentioned yesterday, one of the reasons I wasn't willing to buy at the close yesterday is because of what's going to happen to option values this morning on a little bit of flat. On a little bit of flat, option values are going to get compressed. And, the spreads this morning are going to be a little high. You can see Nike here. The spreads are actually a little bit better than most mornings. But overall, we're going to see some compression really happen in this first hour when it comes to option values. If the market itself just kind of hangs out at this level and doesn't really move in any kind of dynamic way. And that is going to be a theme across the board, from a Microsoft to a Boeing to a IBM to a Micron. Any kind of non-movement is going to be going to result in option compression here, and to me that is that's the big risk that's out there in the market here this morning. Tesla jumping a little bit further than I can go and chase there with it. This is one I mentioned yesterday I'd be looking at on the open. I've been watching it as it's opened up here, but options are probably just starting to be tradable here, and you can see stock up about $9 already. It just kind of shot out of a cannon here from the open. I'll take a look at it in a little bit, but that's a little too much of a gap for me to want to go and chase. Show you here what it looks like on the daily chart for Tesla. You can see it pushing into new highs. I mean, this is a stock that was pretty much left for dead in throughout multiple time periods here this year with some of the issues that they've had. It is a stock that has been left for dead, and you can see that it's almost near all-time highs and pushing higher in almost a stealth-like fashion. And, that is That's a very bullish move here on it. One that ultimately I expect to go higher. We have some volume here in it. We have a nice low volume consolidation. We have some strong outperformance of the market, and a lot of positives there in in Tesla and with what's going on, with that company, with that stock. There's always going to be some headline risk. Always going to be some headline risk there, but short sellers are getting clobbered, to say the least there. All right. We're ticking up here just a little bit, but nothing to any kind of massive degree. We do see the Qs and tech lagging here with Apple. So that is kind of creating some lag here. Within the group. If you look sectorally here, materials are up about 0.5%. Energy is up a little bit, up a little over 1%. The rest are just, up or down just a little bit. Not a huge move. A little bit of negative in utilities here. And that's something that, if you're looking bullish, you want to see that. Healthcare lagging here just a little bit. This has been a really interesting sector to watch. It's not a sector I trade a ton, but, healthcare, kind of lagged a little yesterday on the move, but not to any kind of massive degree there. But man, you can just see how much movement there's been here in the XLV with this move here, and it probably has a little stabilization. I looked at Bristol yesterday, BMY. I thought, you know what? Do I go after this here just yet? But still in that little bit of consolidation mode. So will be something I'll be looking at today as some of the option values compress. But without a lot of these stocks, really making any kind of dynamic move here on the open, it's something that I need to, kind of back off and wait for here just a little bit this morning. I do think Micron could get very interesting today. It's one where if you look at, it held up very well yesterday. Stock charts isn't showing this right. It didn't gap down this morning. That will be adjusted here. Stock charts tends to have their data off on the daily charts right at the open with some of the pre-market data. But if you take a look, it's come back down to the 7-hour moving average after pushing above it yesterday. I want to see that hold. If it's able to hold on or get a little bit of a dip down and rebound back up, then that'd be a nice opportunity to look to take advantage of there. Again, Nike, which pushed above that 7, gapping down here a little bit today overall, but not something I'm going to jump into right away here on the open. But after about 30, 40 minutes here, I'll look a little closer and, look at where option values are and if there's anything to kind of take advantage of. We go and look at a chart like a Micron or some of the others. They're very similar to what I have in IBM. So I already have some exposure, to what's going on and to what's out there. This isn't something where I'm totally risk adverse and just kind of sitting in cash and waiting. No, I have some exposure to what's happening, and I need a chart that's a little bit different, need a dynamic that's a little bit different, for me to want to go and, commit more money here, to that overall. Now, IBM outperformed nicely here yesterday. I had a few questions on that. I didn't read too much into it. It's IBM. If you followed IBM in the last year, IBM and the market, well, they don't always tick the same. They have a few interesting. They've had a few. It's had a few interesting changes in dynamic, but a little pullback this morning that gets bought up would be very nice. I don't have a ton of time in the option here, but it is in the money. But overall, I'll hold on to that for that exposure, and be looking to add exposure on something a little bit different. One thing that I'm noticing is things are ticking here this morning is small caps. Small caps have been pretty strong here this morning. in their tick on up, pushing on into new short-term highs. This is a group that outperformed yesterday to some degree, but not to a dynamic degree that was wow. This is amazing. But outperforming nicely here this morning. That probably bodes well for the banks. Bodes probably well for the regional banks, the KRE, and even some of the biotechs. If you're looking at, if you're a big biotech trader, the IBB, ETF, and some of these stocks like an Amgen or Celgene and whatnot, you see small caps trading up. Generally, you'll see these stocks hold up on that day and do pretty well, but we're not seeing it here just yet. I continue to look for a bottom in things like U.S. Steel and things like FCX, and still just haven't found what I want to really enter and get aggressive there. One of the things I'm really hoping that we see is some of the option values today really compress nicely, especially in some of these names where the implied volatilities are a little more elevated than what they really should be. And I think that would be a very bullish sign for the markets going into next week. If we see implied volatilities today in options hold up and not bleed and not shrink, that's going to be a pretty good indication that the market is still going to have a lot of chop ahead of it, going into next week. But if we see those IVs bleed here today, and, one of the ways you can kind of see if that's happening is to just kind of look at the VIX, right, which is down 3.5%. And if the VXX is trading down more than the VIX on a percentage basis, generally we're getting a lot of implied volatility bleed. We don't see that just yet, right? We don't see that just yet. But as we go into this afternoon, later this morning, we start to see that. I think we're going to be talking about a market. The path of least resistance is still going to be higher from this point, and bulls likely in control. But if we don't see that, the turmoil, the chop is going to continue to be real. I made the comparison last Friday that the market's going to be going into an earnings period. Right? It's going to act like an earnings stock. And, it really has this week. Right? I mean, last Friday, S&P sitting at 276. We get the earnings news, quote-unquote earnings news, boom, big pop. Then we get some analyst commentary on it, and then we get a little bit more of company commentary on it. Big drop, and now pop back up. It's really kind of had that, hey, stock reporting earnings, and just wild reaction here to that earnings report. We don't see that much from the market itself, but it has played out in that with that dynamic. And now that we're a few days past that, now it's going to be a time where we tend to see options shrink, we tend to see the average movement shrink, and we tend to see that there come in to be some more risk-reward setups, that come into play overall. And that's what I expect that we will see here in this market. Okay, Caterpillar is one that very interesting to me. As this morning plays out, I'll go back and price this out here. But made that move back above the 7-hour into the close yesterday. So it's a little too much there. I was kind of hoping it would gap above the 7-hour this morning, but still in a pretty good position to look to take advantage of. If we just click on annotate and we go and put a retracement on it, you can see it still has a little ways to go for the retracement there. We looked at Caterpillar options yesterday, right? And while the options weren't ridiculous compared to the rest of the market, needed basically a $10 move to double my money, and that is if the implied volatility stayed the same. And so, obviously that's not going to happen if the market rallies. So it does create a little bit of a headwind there for the option values themselves, not for the stock itself there. As I'm talking, market's really seeing a pretty hefty buy come in here to it. Here we go. Yeah, you can see S&P futures moving on up on volume here. Excuse me. All right, excuse me. Pretty nice move. If you look, a lot of the safety areas from yesterday or areas that held up decently yesterday, they're getting dinged a little bit or lagging a little bit here today. Not too uncommon to see there. Pepsi down about $1. This is one that rallied into the close yesterday, and I looked at it, thought, nah, do I go buy some puts on it here just yet? I still have not pulled the trigger. I still have not, I have not found that spot that I'm comfortable with pulling the trigger. But you can see back above the 7-hour, we start to break back below that 7-hour this morning. I will definitely be interested. But as I look at things right here, right now, and where option values are here on my other screen, I'm going to give another 15, 20, 30 minutes for things to play out this morning. And then I'll assess some of the entries, that are possibly out there. I have exposure to a lot of what the charts are out there, with IBM and with some of the option risk that's out there with IBM. So I don't need to add that exact same exposure. But there are a few places, like we've looked at, that could be just a little bit different here as the day progresses. Have yourselves a great one, and we'll talk to you later. Take care.